All right, good morning. I am Scott Shelley, otherwise known as the Cow Guy. Great to be here with you. Lots going on in these markets, folks. We've kicked off this week, this month, this quarter with some volatility, haven't we? Well, let's take a look and see how the overnights did. We had a little bit of a peek into it with what Tammy had to say. Let's see what we've got going for us here as far as corn overnight. Down a little bit here, 1 1/4 to 1.5 cents. We got a 1 1/4 sell-off in the May. 430.5 is last. Boy, oh boy, wouldn't it just be 2 ticks off the low of the day? Again, it seems like that's just always trading heavy, isn't it? Deese, the new crop, that was down 1.5 cents overnight to 469 3/4. Let's move over to see what the beans did overnight. They were off 6 3/4 cents in the front month, May. 1175.5 is last there, a penny off the low of the day as well. And the highs are about 11 cents ago, so that's in the review for sure. Nove, the new crop, that's 5.5 cents lower to 1179 1/4, just 3 ticks off the low of the day there. And again, 9 cents ago was the high there. So soybeans and corn trading a little bit weaker overnight. Wheat also a little lower. We've got a May wheat down 1/4 cent to 5.55 3/4. And that's a penny and 3/4 off the low of the day there. We haven't had a huge range, but it's still about 7 cents off the highs. And then we've got a Deese board that's down 1.5 cents to 6.12 even, just 2 ticks off the low of the day there. That's Chicago wheat. Let's take a quick peek at hard red Kansas City wheat, 2.5 cents higher. That's a little bit better, isn't it, folks? We'll take an up board right now. 583 is last there. We're 3 cents off the low and about 5.5 cents off the high. All right. So we had been about 5.5 cents higher. That's what I'll take away from that. Deese is up 1 3/4 cents to 606 3/4, 2 cents from the low and about 6 cents from the high. All right. So that'll give you an idea about how that stuff managed overnight. And spring wheat, we'll take a look at what's going on in Minneapolis. That's up a nickel up front. 644.5 is last. That's about 5.5 cents off the high and about 6 cents off the low, right smack dab in the middle of the range. How about that? Deese is up 6 1/4 cents to 681.5, 2 cents off the high of the day there. Well, how about cotton? What did that do for us? It was a little easier. Yeah, 46 points lower in the May to 88.52, 26 points lower in the Deese to 83.84. Let's now bring in our next guest, our first guest of the day. He's leading off, Brian Hoops, Midwest Markets Marketing Solutions. He's the president there, and he comes to us all the way from Springfield, Missouri. Thanks for getting up with us here, Brian. Can you make sense of any of those numbers for us?
Hey, good morning, Scott. Well, the grain markets are, if you look at a chart, we're starting to struggle. We kind of started a little bit of a rally right around the end of February into delivery period, and it continued into March. But at the end of March, when we had that big stocks and planning intentions report, we started to see a little bit of weakness. We saw a bullish reaction, and then we started to see additional weakness since that report has come out. So you really have a chart that looks like it's turning lower here in both corn and soybeans. And part of that is probably due to lack of any weather threats out there and very little reason for these fund traders to cover more shorts. I did cover some shorts during the month of March. I don't think they're covering anything right now. We were kind of just choppy, but the lows are lower. The highs are lower, and so that's the kind of definition of a downtrend. And the export sales that were out this morning aren't helping things. Corn, 37.3 million bushels. It's an okay number. Soybeans, okay at 7.1, but the wheat was only 0.6 million bushels. That's not a marking year low because we did have a week of net cancellations a few weeks ago. But those export numbers don't help us out either.
All right. So, I mean, I don't like this, but it feels like we're waiting for one of two things to happen if you're a producer. Number one, short cover rally by the funds. Number two, weather. I feel like that's going to be the majority of the market out there. What do you think?
No, absolutely. You nailed it on the head. That's almost everyone's marketing plan at this point in time is kind of just waiting, trying to be patient. And, they've ran a lot of guys out of this market, and if they haven't flushed you out yet, you're probably in there for at least a June, July, August type of spike event. So you're most likely not going to get shooken out here in the month of April by the fact that we're starting to work lower. You're gonna wait and see how the planning goes, how the summer goes, and if anything does develop in South America to give us a little bit of a spurt to begin with.
I just hope it happens sooner rather than later. That's for sure. All right, stay right there. We're gonna go. We're gonna pay some bills. We're going to talk more with Brian Hoops. We're going to come back and talk a little livestock right after this. All right, welcome back. Let's see what we did in the livestock yesterday, just to give you an idea about where we're going to be jumping off from here today. There's a lot of talk and stuff going around this market, as I'm sure you're well aware. We just covered a little bit of a market day report here before I sat down in the chair. So let's take a look and see what we did yesterday and remind ourselves that we were just a little lower in that live cattle market. April was down 85 cents to 180.92. Go out the defers just so you get an idea about how that curve is trading. Deese is down 87 cents to 179.80. All right. How about the feeder cattle? Well, let's take a look at that. That was also lower, but it wasn't as low as it had been, right? 240.95 was the close in April, down $2.55, but that's well over $1 off the low. So we had been a lot lower at some point in time during yesterday's session. September down $2.07 to 254.07. And then finally, lean hogs. This one didn't get the memo. It was the beneficiary yesterday, up $1.42 in that April contract to 87.97. If you go out to say even July, that was up $1.32. One of the leaders of the day, 106.92 was last there, but still well off the highs by about 50 cents. All right, let's bring in our guest analyst. That's Mr. Brian Hoops with Midwest Market Solutions. All right. It's still all about bird flu, I guess. That's stealing all the headlines, Brian. It doesn't look to be that bad, but it doesn't matter what we think. It's bad optics, and we might have a big customer that thinks it's bad.
Well, that's kind of the problem, is if you get these big funds to consider it to be a bad investment to be long cattle futures, you can see what happened on Monday when that news broke. We dropped really sharply. Now, we've tried to recover until yesterday when we went and took those lows out, and then we recovered, and hopefully those lows will hold. But there was some cash trade developing yesterday afternoon, $2 lower on a dress basis in the north at 298, about 187 live, and it looks like we're going to trade probably a little bit softer in the Southern Plains this week, maybe around 184 to 185. So the market is looking at a little bit softer cash trade in here. Maybe there's some little negative fundamentals as well, besides the bird flu. The export sales have not been great. This morning's was better, 18.7 million tons. Now the pork sales have just been outstanding recently, and they've probably been rallying this week anticipating that, but they're going to be disappointed. It was only 28.7, well below what we've been doing recently. So you're probably going to see, I think, a little weakness in both those markets to open up the trading session this morning.
I mean, if you're long cattle, do you get out here, or what do you do? I mean, what are you talking to any ranchers? What they want to do?
The big problem is the sales at the sale barns, feeder cattle sales, have not backed off whatsoever. They are buying aggressively, paying a lot of money for these animals, and I don't know that you can lock in a profit on anything right now. So that's an issue. They were betting on prices rallying, and prices have stalled out and are not rallying. So we need to see some sort of a rally so that they can have some opportunities to get hedged, but I don't know it's going to occur right away at this time because of the negative fundamentals that we're seeing.
Yeah, I mean, it's just a shame because it is a bad optics thing, really. I mean, we're not seeing any animals really die from it, at least not cattle. But we're going to have to suffer through it. Maybe when we finally get through this migration with these birds, it will settle down a little bit too. But all in all, you just want to make sure that you don't have any bad optics to those big customers and/or investment houses that want to trade it, right?
Yeah, exactly. You got to protect yourselves. Got to be careful.
I agree. All right, thanks for that. Great stuff. Great way to kick off the morning. Thank you very much, Brian Hoops, Midwest Market Solutions. He's in Springfield, Missouri. We're not. We're here in Nashville. And I'll hand it back. I can say good morning to you.
Good morning.
I haven't properly said good morning.
Good to see you today. Ready for a big day.
Here we go.
Thanks, Scott.